Welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. Joining me at the market site in Times Square, Jay Gragnani. He's back with us. He is our head of research and client engagement over at Nasdaq Dorsey Wright with his 2020 outlook and review of what has happened in 2019. Jay, it's great to have you with us. As always, clearly December 2019, a very different picture than 2018, and just continuing to see the further improvement in the equity markets.
Fortunately, a very different picture than last year in December. Obviously, a ton of volatility going on in the market last year at this time. This year, we're seeing quite a different picture there. As you go back and you look at the markets this year, and they've been strong. The S&P, depending on the days, up around 25%. But it's really been a rally across the board, not just in individual sectors. Technology continues to have led the market rally this year. Technology sector up about 40%. But what's interesting when you look at all of the sectors, just the big sectors out of the 11 broad sectors, 9 of the 11 are up 20% or more this year. There's been just a tremendous amount of strength, and then the perpetual laggards of energy going on now. 5 out of the past 6 years as being the worst performing sector. Nonetheless, as we come in now to December of this year, we're continuing to see improvement in the equity market across some of our indicators. And one of those indicators that we look at is looking at the percent of stocks that are trading in an overall positive trend. And so this is a number that we track where last year, as we came into about this time, back in August of 2018, we saw it fall below that 50% mark. But here what we've seen now is that percent of stocks that trade in the market are now back above 50%. And that's a pretty notable line in the sand that we look at. Certainly when you get a healthy market environment like we've seen this year, and you see a majority of stocks are trading above their positive trends lines, or we call them bullish support lines on the point and figure charts, a majority of stocks now are in positive trends, and that historically has been a very healthy sign for the market. And basically what that just tells us is that we continue to see improvement on the trend charts, but it's also when we've seen that mark of 50% or higher on the PT NYSE indicator that we're looking at, again, the percent of stocks there, we've seen the magnitude of market movements expand, whereas on average, the S&P's been up about 17%, while that indicator's been above 50%.
All right, and let's take a look at our first chart here. This is the PT NYSE. Tell us exactly what
this is some of that data that we were just talking about there is on the left-hand side. When that indicator gets above that 50% level, it's happened a handful of times over the past few years. Most recently, you go back to 2016, 2018 time period, while that indicator was above 50%, the market returned about 30% during that time period. But on average, 18% is the return for the S&P 500 while that indicator is above 50%. On the other side, when it's below 50%, it doesn't mean that the market has to go down, but only about a 3% movement. And so when I take a look at that and what does that mean for the market today, is that while we've seen a nice run this year and over the past couple of years, there certainly is some more room left to move to the upside from here.
All right, our next chart, point and figure on the S&P 500.
So the S&P 500, and this is something we've looked at this year, we continue to see up on the top right-hand side there, the 3140 mark on the S&P chart, sitting at very, very close to all-time highs. 3160 would be a potential another breakout to the upside for that S&P 500 chart. But clearly still an overall positive trend there for the market. Again, 3160 is kind of that mark that we're looking for to break through to that next level of resistance on the S&P 500.
All right, let's break it down with our last chart here to the asset classes. Dynamic asset level investing, the numbers have changed, but it looks to be that the allocations remain the same throughout the year.
That's right. We've seen our Dolly ranking, where we look at all the broad asset classes. U.S. equities has been that #1 ranked asset class for the duration of this year. And what we've seen here over the past couple of months is those numbers, that 320 number that you see there, stands for the number of buy signals that asset class has on a relative strength basis. And that number has actually increased over the course of the past couple of months, suggesting that U.S. equities are continuing to improve, not only in an absolute basis like we saw on the S&P 500 chart, but relative to other investment options out there, whether it be international stocks, fixed income, or currency. U.S. equities continues to be the dominant asset class that we're looking at headed into 2020.
All right, Jay, thanks so much for joining us at MarketSite. And thank you for joining me on Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq.